Hello traders and investors, welcome back to the Trend Trader channel. In today's video, we're just gonna do things a bit different. Today we are going to be talking about dividend paying stocks. So in the JSE, there are over 300 listed stocks. Those includes just companies that are involved in the real estate investment trust, which are called REITs, and also there are ETFs. So when we do the scan, it's possible that we found all those companies that, it's not just individual companies, but some of the companies that are classified as REITs and also some ETFs. So for the purpose of this video, we didn't want to look at all the companies that are listed in the JSE. We only looked at the companies that has a certain or that meet a certain criteria. The criteria was simple. We're looking for companies that have a dividend yield that is greater than 2%. We know that 2% is not the best dividend yield given the current inflation rate. But remember, the JSE only has just above 300 companies, not more than 400 companies. So once you have a more strict selecting criteria, then you are more likely to discard other companies. For example, in this case, when we're just looking at companies that have a dividend yield of greater than 2% or more, we only matched about 91 companies. And then we went ahead, we filtered those companies by looking at companies that are in an uptrend. Then we were left with a few companies. I think it was just about 40 companies. Then from those companies, obviously, our subjective, I selected other companies. So in this video, there are companies that you know that pay high dividends or that have high dividend yield that are not in this video. That is because the other criteria that we used, we're looking at companies that are in an uptrend. As you know, we've been following this channel for a while now. You know that I'm always interested in companies that are in an uptrend. I don't want to just buy a company because it pays a dividend or because it's a company that I like. At all times, I'm always looking for companies that are in an uptrend. So companies that are like, for example, some real estate investment trust, the share price is just moving sideways, the dividend yield is high. Depending on your investment strategy, you could be you could be interested in that particular company. But for me, at all times, I always prefer to invest in companies that are in an uptrend. So let's go to the videos. Let's go to the companies and see what we found there. And then I'll be touching some of the companies as individual companies. So this is the list of all the companies. I just used the screener on TradingView to find some of these companies. What I have on the screen is just the JSE ticker, because it's easy. I can use the JSE ticker to find the name of the company, the full name, and also the share price. The dividend yield, the equation that I used to use in the past, it's no longer helping me to get the dividend yield to update automatically. I don't know what Moneyweb did to their website, or if Google Sheet changed the way that you can get the dividend yield information, but the other information you can just easily pull off on Google Finance. The equation there is simple. You just use Google Finance and the ticker name, then it will give you the full name. And also if you want the share price, you just use Google Finance to specify the ticker name. Because we are looking at share prices in rands, then you need to divide that by 100, otherwise you are going to get the share price in cents. So if you're looking at this list, you can already see that we've got a couple of companies. I actually wanted to open the Reserve Bank website so that you can see what's in there. So if you look at the Reserve Bank website, you can see the inflation, the consumer price index. For the February result, it's sitting at 5.7% there. So that is the basis of why some of those companies are highlighted there, because they have a dividend yield that is greater than 5.7%. But the criteria that we used on TradingView, we wanted companies that have a dividend yield of greater than 2%, greater than or equal to 2%. So these are some of those companies. As you can already see, I also mentioned that these companies are the companies that are in an uptrend. So in case you know a company that has a dividend yield that is greater than 2, that is not in this list. That is the reason for that. Like I said, I want companies that are in an uptrend. So from these companies, you can see not a whole lot of companies have a dividend yield that is greater than the inflation rate, which is 5.7%. But you can see that combined motor holdings have a dividend yield of 8.31%, Exxaro 14.13%, Mustek 6%, Thungela 9.2%. Then we've got two real estate investment trusts there that I placed separately. As you can see, these ones, they have a double-digit dividend yield, but also Exxaro has a double-digit dividend yield there as well. Another thing that you have to keep in mind is that the dividend yield is calculated by taking the annual dividend. By annual dividend, we mean that it's a combination of the interim and the final dividend. Then you add those numbers together, then you divide them by the share price, and then you can find the dividend yield. We've already made a video in our other channel. I will leave the link to that video in the description, whereby we're talking about the pitfalls of just using the dividend yield whenever you are selecting stocks. This is why it is important for us to also look how that company is performing in terms of the share price, so that you can make an informed decision whenever we're looking at these companies. Then how do we get this dividend yield information? Depending on whichever software or website that you are using to get information about companies. In this case, I was using Moneyweb. Moneyweb is free, but you can pay because there are some things that you cannot access unless you pay there. So if you go under menu, there's an option there to click between tools and data. When you click that, there's an option to click a company. Then once you're in a company, you can see that there is a list of all the JSE companies. Probably it's even companies that are not listed in the JSE. So let's say, for example, we are looking for the information on Redefine. The share code for Redefine is RDF. So now we find Redefine there. When we click, we can get a whole lot of information, but the information that I'm interested in today is the dividend yield. So you can see the dividend yield of Redefine is 13.27%. So there's information that I have there, but there's plenty of other information that you can find. You can look at the chart of Redefine depending on whichever time frame that you want to see the period. And then also you can see some information about Redefine, like income statement, balance sheet, and other information if you're interested in earnings per share. And then you can also see that there are some different dates there. For example, when they're going to release the result, you can find that information there. So just by going through Moneyweb and clicking a company, you can find the information about the dividend yield. Another way to find that information, if you are on TradingView, if you are familiar with TradingView, once you're in the company that you're interested in this case, we are looking at Redefine Properties. Then if you look on the left-hand side, this option most of the time is just closed there. So if you have a watch list, you just need to go down a bit and be able to pull up this window. And then as you scroll, you can see that we're looking at Redefine. It tells us that it's a finance company, but it is also a real estate investment trust. We've mentioned in the past that when we are looking at Citrix Fin, we are looking at companies that include banks, insurance companies, but also some real estate investment trusts are classified as financial stocks. So that is why it is no surprise that Redefine is found here. Then as you browse, you can find some key statistics there, like the volume of the shares that traded, the average volume market capitalization of that company, and the dividend yield. If you look at the dividend yield that you find on TradingView, it's different to the dividend yield that you are finding on Moneyweb. On Moneyweb, we have 13.27%. But on TradingView, we have 13.42%. So this, it's not just, you don't necessarily have to find the best information about dividend yield. If you go to Yahoo Finance, you might find different piece of information. But that is all that is required today. You just need to have an idea of the number that you are looking at. So now you can already see the list there. So if you want to take the names of these companies. You can just pause the video, then go through each and every company then that is on this list. It's different companies from Afrimat, Shoprite. Most of us, we love Shoprite. We're invested in Shoprite because it does pay dividends consistently, but by comparing the dividend yield, we are not getting the full picture because the dividend yield is lower compared to other companies. Again, if you just use the dividend yield information, you may miss out on some great companies that perform better in terms of share price appreciation. So you really need to try and refine your approach. Use something that you are comfortable with, something that has given you reasonable information, useful information over time. So as you can see, the companies that I have highlighted, these are the companies that we're going to be looking at the chart for. But the good thing, for example, one of these companies, Combined Motor Holdings, you can see that it has a dividend yield that is greater than the inflation rate, and I've highlighted it. The ones that I've highlighted, it's the ones that are in strong uptrend. Some of the other companies are also in the strong uptrend, but they are just far from an area of value, especially if you want to start buying these companies now. One thing that I don't do personally, I don't buy a company based on the share price. For instance, in this case, we can see that Anglo American PLC is trading at 782 rand. To me, this doesn't mean anything. I can just buy this company. To me, there's no company that is expensive or cheap. For example, I'm not going to ignore buying Anglo American PLC and then focus on buying Redefine just because Redefine is trading at 4 rand 48 cents. The only thing that matters when it comes to share price and the dividend yield, the share price has an inverse relationship with the dividend yield, meaning that if the share price is lower, the dividend yield is more likely to be higher. For example, in December, Redefined paid a dividend of about 1 rand 40 or not 1 rand 40, it was about 60 cents or so per share. And then because of that dividend yield, which was a bit high, that is why we see the dividend yield that it is high as the share price is low. But if you look at a company like Anglo American, well, they paid a high dividend, but the share price is just too high, so we are not surprised to see that the dividend yield is not that high. And then other people will try to buy these companies when they are trading at lower prices because they know that these companies, they can pay dividends and they also want to get them at a lower price. In my case, the share price doesn't matter. I can buy the company at 782 as long as at some point I'll be able to sell this company at a price that is greater than 782. I will still make a profit. I don't necessarily hunt for shares that are trading at lower prices. So let's look at the chart of Combined Motor Holdings. Like I said, I'm using TradingView. I'm using free TradingView. That is why you see those ads keep on popping up. One thing that I like about this TradingView is that I can still see the information even though I'm using this for free. So I'm just gonna go to the weekly time frame so that we can get more information compared to the daily time frame. I like to look at the information at over 4 years. So in this case, we are starting at 2018 coming all the way to the current share price. And then I prefer to trade companies that are trading above the 200-day moving average. I use that as a bias line. It's not perfect. I don't want to be invested in a company that is below the 200-day moving average because as you can see from the chart, all the time the company is trading below this level. The company was in a downtrend. But as soon as the company starts trading above this level, then you can see now that we are in an uptrend. Then that is when I start to look for buy opportunities. Okay, so let me try to find a pick pen because that's something that I can easily use to draw. Right, I'm just gonna try to maximize the window a bit because I can't just put the window on full screen and use EpiPen at the same time. If you know a way to use it, I'm not necessarily familiar with this operating system, So I'm still learning the ropes. Like I said, if the share price is above this 200-day moving average, most of the time it is on an uptrend, and if it's trading below this level, the share price is trading below this level. So for the purpose of this video, what we mean by an uptrend, we mean that the share price should be trading above this 200-day moving average. So we are only focusing on those companies. So if there's a company that has a high dividend yield but is trading below this level, definitely we don't have that company in this watch list. So what attracted me to combine motor holdings, we saw that as a person that uses technical analysis, I always say that we are looking at price action. In this case, we saw that CMH has been on an uptrend, then it started to form a base. So what we wanted to see this breakout here. By that I mean the share price was moving up nicely, then it started to consolidate, moving sideways, creating that range. So what we want to see there, we want to see the share price break above this range. Okay, that's a bad choice of color that I've chosen there. So what we want to see, we want the share price to break above this trading range, then you can expect the share price to continue to push all the way further up. And it is what we see with CMH. It's already above this range. Remember, the range is subjective. Another person can draw the range to include this low and also to include this high. But at the current share price, it is trading at about 28 rand 55 cents. So even if you buy at this level, you can just easily set a stop loss somewhere around 24 rand, and the risk that you'll be taking is going to be about 4 rand 55 cents, and then you'll be anticipating that the share price is going to continue to go up. And if the share price does go up, you will be receiving those dividends over time as the share price is going up. So let's see what's the next company, Omnia. We also recently added Omnia into our dividend portfolio. If you don't know, Omnia is a company that produces fertilizer. I won't be covering what each and every company does. That is something that you can do on your own time. But again, Omnia is trading above the 200-day moving average. We're looking at this resistance level here, expecting that once Omnia starts to trade above this resistance level, then we can see the share price going up. We saw that when the breakout was happening, it was accompanied by a high level of volume, but also there were these previous levels there. As the share price was going up, it found support here, then it tried to rally above, then it found resistance there, and then for that reason we were also expecting resistance to happen somewhere here. So we had the position for a long time. We're just mindful of this level, and then we were waiting for this Omnia to start trading above this level, which is about 70 rands per share. So remember, patience does pay in the market. You don't have to always just jump into positions. It's better to just wait and see how things are going, and then once you are happy that okay, now the market is moving in the direction that you're expecting, then you can jump in. And then we saw that there was this breakout here. Fortunately, it happened with a good amount of volume. By a good amount of volume, you can see there's an average amount of volume, so we're always looking for an above average amount of volume. Then this tells us that there are in fact buyers that are pushing that share price high. Then we took a position somewhere around 70 rand per share, and then we had our stop loss just a few points below the breakout level. At this moment, Omnia is trading at 74 rand per share, but it's still above this. We saw that last week there was another breakout with a large volume, showing that people are accumulating this stock. So we are confident with this position. But remember, confidence is subjective. You always use a stop loss because you will never know when the market can decide to reverse. Whenever the market reverses, you want to ensure that you don't lose a lot of money in the market. Another mistake that we've made in the past and that we see other people making is that whenever people they see an opportunity in the market, they just believe in go big or go home mentality. You don't bet a farm on any opportunity, By betting a farm, I mean that if you see an opportunity, you don't take all the money that is available in your portfolio, you dump it in that particular stock, because these patterns, they can fail. We use technical analysis, so we rely a lot on price action analysis. But even if you are a fundamental investor, you can do a fundamental analysis, look at whatever metrics that you're interested in for all these companies that you're analyzing. But you're not in control of what is going to happen the following day in the market. Today the company can look good, the numbers are great, you can see that there's a good thing, that company is more likely to be profitable. Then tomorrow the company releases a result, they tell you that they are not profitable. Then what do you do then? So don't be overconfident whenever you are taking positions. You are using real money to take these positions. So if they reverse, then the value of your investment is going to start decreasing. So while you can tell yourself that you only lose when you sell, but I know that whenever the market starts to go against you, you start to feel the pain. So just at all times, be mindful that it is possible that the share price can reverse and then the value of your investment can decrease. You can say anything you want to say about value and the sector and the market and everything, but as the share price is decreasing, then the value of your investment is also going to start to shrink. You can say that it's not a problem. The problem starts when you start to feel the pain on your loss. Then you don't know what to do there. So yeah, back to the chart. We love Omnia. We've added Omnia into our portfolio. We are happy with that position. We've already covered combined motor holdings. Then let's look at Shoprite. Shoprite is going to be paying a dividend soon. The ex-dividend date is fast approaching. We've been holding Shoprite since 94 rand. Yesterday I made a tweet to say that I don't have multi-bagger in my portfolio because I buy and sell companies as they go up. But the first time we bought Shoprite, it was trading at around 194, and every time it breaks above certain key levels, we've been adding onto our positions there as we're moving up. Our recent addition was somewhere around 230 something. I just want to remove the drawing so that I can see the price where we made our latest edition. So we bought more Shoprite shares at around 231, and then we have a stop loss around 218. That position is still trying to build there some momentum. What we would like to see, want to see Shoprite trading above 236. That will be a nice confirmation that the share price is moving up. We're targeting the previous high there around 208 or so. But this is just a swing trade. We have a large position here that we are planning to keep for as long as Shoprite is moving up. But from time to time, we will take swing trades, because swing trades allow us to make quick cash, if I can put it like that. There's nothing as quick cash in the market, but they do allow us to make some money that you can use to invest in other companies, especially if you want to establish another position while we are waiting for dividends to come, or we are waiting to have cash that you can deposit into our stock brokerage account and start buying companies. So from time to time, we do have companies that we like to own over the long term, but every time we see some tradable pattern, we will definitely take that opportunity to trade that company. But what you see here on Shoprite, it's on a nice strong uptrend. It keeps on going up. That is why we took that swing trade. But Shoprite is one of our long-term position there. So let's see what else do we have. We have Exxaro. Exxaro, it's our new addition. We recently bought Exxaro. I didn't have Exxaro for a long time in my portfolio. Now the reason for buying Exxaro, it's very simple. You can see that Exxaro is trading above the 200-day moving average, and then we noted this trading range there. If you know, we've been following us, we also like to trade this range breakout. So when Exxaro closed above this level there, even though there wasn't a lot of volumes, I just want to see how much the volume was there. So if you count back, so it's 1 2 3 4 5 6, then we can count the candles. The volume bars 1 2 3 4 5 6, then you can see that this green bar is also above average. So it shows that investors were accumulating this stock, and then this breakout is more likely to survive, but nothing is guaranteed. As you can see now, it's also now start between this range of about 195 and 225. So above 230 something, then that will be a confirmation that Exxaro is moving up there. But as you saw that the dividend yield of Exxaro is 14%, so we are happy with that. Exxaro is a coal company. They've got a multi-year coal contract with Eskom. We love Eskom. We want Eskom to continue to work because we need electricity. Without electricity, there's nothing that we can do there. So we are happy with our Exxaro position. At this moment, the position is on profit, and we expect the position to continue to be on profit. And then the last company that I want us to look at is Mustek Limited. For those that don't know Mustek, it's a company that sells technology product devices specifically. So if you're using a smartphone, you're using a PC, even if you bought that smartphone in another company, Vodacom, MTN, it is most likely supplied by Mustek. Or if you're using a PC, it doesn't matter where you bought the PC, it is most likely supplied by Mustek. They have that contract to distribute electronics in the country. Right, let's look at price action. We see that the share price is moving up nicely there, and then it starts to trade in the range. So once it's in the range, then we waited to see where it's going to break. That range is going to break. Let's see where I can change the color. Right, so if a share price is trading in the range, the worst case scenario for investors is that the share price can break lower, meaning that we can't buy that company because it is falling. And then the other scenario, of course, is that the share price goes up. That is the scenario that we want to see as investors. If you are somebody that is trading contracts for differences and you are comfortable with a shorting stock, then you will be happy to short a company that breaks below a trading range. But for investors, we're looking for a breakout on the upside, of which we saw there. Again, it is accompanied by volume there. So we are happy every time we see a breakout that is accompanied by volume. We are happy to take that position because we are confident that that upward move is most likely going to be sustained. And also, if you look at the slope of the 200-day moving average, it's facing up, meaning that the share price is moving up because the moving average is a derivative of the price. The price works first, then the moving average or the indicator, it follows. There is no indicator without the price. So as long as the share price is moving up, then we can also expect the indicator to move to continue to move up. So now you see we bought Mustek somewhere around 14 rand per share, but also there is a pending breakout. Remember, we are using a weekly chart, so we are just going to wait for this candle to close above this level as a confirmation, and we'll be happy if you can see a large amount of volume to say that this share price is moving up. We'll be very happy if we see that. So again, always wait for confirmation, but if you are using a daily time frame, then you can easily make a decision based on the daily time frame that you are seeing. As you can see now on the daily time frame, the share price is still moving sideways. Yesterday it attempted to break above. You can see that there is a nice amount of volume there. This candle there, you have a tiny amount of volume. Some of these companies are not that liquid. If you look at that volume, it's about 139 shares that are traded. You can also filter down and look at companies that trade or that have high volume. For example, you can look at companies that have over 1 million shares that trade daily, because you don't want to find yourself in a position that you buy a company, when you try to sell that company, the broker is failing to match your trade, then now you can't live with profit because nobody is willing to buy the shares from you. So there are so many things that you need to think about whenever you are investing in the market, how easy it is to get the shares at the price that you are looking at, and also when you want to exit that position, how easy it is going to be for you to exit that position. It's only going to be easy if you are trading a liquid share. When you place a trade, there's someone on the other side that is willing to take those shares from you, or if you are buying on the other side, there's someone who's willing to sell their shares from you. Okay, so do keep in mind when you look at that, and then you can see that the small d, it shows that Mustek paid a dividend. If you look at the dividend that they paid on that day, let me remove the drawing. If you look at the dividend that they paid on that day, it was 90-cent gross dividend. So you have to subtract that 20% dividend withholding tax. So before the dividend, they announced the earnings. So they had a nice earnings there of about R2.27 per share. And then the new earnings is R2.32. So if you compare the two, it's 227 and here it's 232. It's just a slight increase, nothing hectic in there, but they have declared a dividend. So we know for sure that a dividend is coming from this company. So of the other companies that I wanted to show you, all right, Thungela, we know people love Thungela. We've been trading Thungela for a while. It's just been moving up. One thing that is worth noting with Thungela is that it has been moving. No, I'm not going to buy it. It has just been going up nicely there. We had plenty of trading opportunities. Some people, the people that invest in IPOs, they were able to get Thungela just below 30 rand per share, and those people have been rewarded handsomely. As you can see that now the share price yesterday, it traded at 219 rand per share, which is great. I didn't buy Thungela at the IPO level. I don't necessarily buy IPOs, but this was a spin-off from Anglo American. But in general, I don't trade IPOs. So the only time I started to trade Thungela, we even have a video there. We saw that Thungela reached, okay, no, not 100 rand. That was before 100 rand per share. Okay, yeah, it went all the way to 100 rand. Then it pulled back and then it found support somewhere around 60. That is when we established a position there. It was a small swing trade and we were targeting this previous high of 100 rand. So we were able to make some money here from 60 rand or 62 rand per share. That was our enterprise, 62 rand, and then we reached that 100 rand. It did took a bit of time for us to reach our target, but the nice thing that happened is that the move to 120 was just explosive. It happened in one shot, so we're happy that from our entry we're able to double our money. We don't expect to reach 100% return from all the positions that we take. Sometimes it happens, sometimes it doesn't happen. We are excited when that happens. Then now from there, the move from that 100 rand breakout, it also happened rapidly. We saw that the share price, it went to trade above 165, but also around that time, that is when the Ukraine and Russia conflict started to happen. We saw the share price, the price of coal, it just shot up. So we were able to lock in some of our gains there. We exited our positions. We saw that now Thungela was trading in this range between 180 and 140. Then again, we sat on the side because we were waiting to see if Thungela was going to break down and come back to retest this 100 rand region, or if Thungela was going to break above this level and move up there. So the nice thing that if you can plot a nice trading range, you can actually set a buy stop order there. So we had a buy stop order around 181 rand per share with just the stop. The stop was somewhere around 176, because sometimes what you get whenever you're looking at a breakout, the share price can break above a level, giving a fake out, then you get sucked into a position, and then the share price come back crashing. So we always have our stop loss there, because we don't know, depending on the size of the range, the share price can go down and retest the bottom of that trading range. So we want to protect ourselves, because we don't want to go down with that stock as it goes to retest the bottom of that range. In this case, if the share price, it gave a fake out and then it came back to 140, we wouldn't want to be in that position. So we are happy now that our new position is also up from about 180 to about 220. So that's about another 40 rand profit that we made from this particular trade. We are still in this trade. We don't know how far it's going to go, but we also know that Thungela is going to be paying a dividend soon. Well, there's nothing wrong with the company. We are just worried about the rapidness of this price action. So if you see now this it just shot up. If you noticed, the share price went down a bit. That's because now it's 9:15, so the market is open, so something is happening there at the share price. So we can see the share price shooting further up or shooting further down there. Anything is possible. So that is one thing that you need to note when you're looking at these companies. So let's see if there's any other company that is worth talking about. Okay, Redefine and Vukile, we saw that they are double-digit dividend yield companies, but let's look at the price action of those companies. I mentioned that these real estate investment trust, they don't necessarily have the best price action. So if you're an investor, you are comfortable holding those companies for a long time without necessarily reaping any benefit in terms of capital appreciation, then you can invest. But if you look at Vukile is trading above the 200-day moving average, so it's moving up nicely. We saw that it broke above this level there with a tiny amount of volume, not the best volume, but it's moving up there. So it's not bad. It's a company that you can consider to add in your portfolio. Then the other company that I want to look at lastly is Redefine Properties. Yeah, you can hear that the guys are cutting grass outside now. There's noise. So now when you look at Redefine, despite this nice 13% dividend yield, if you look at the share price is just moving sideways, but investors are getting paid. Again, it boils down to your strategy. So investing for dividend income, the analogy that I would like to use, it's like you are taking your capital, you are buying something, that's something that is going to give you money each and every month. Well, in this case, these companies, they're going to pay you dividends every 6 months, not each and every month. So now it doesn't matter what happened or what happens to the product that you bought, as long as that product, it keeps on giving you money each and every month, and you are comfortable with that, then you can easily buy this real estate investment trust, because you are not worried about the value of your investment. You are only interested in the dividend income that you are receiving from these companies. So yeah, that's it for today. That's what I wanted to share with you. So in today's video, I showed you that we can find companies that have a dividend yield that is greater than 2%. We can also find companies that have a dividend yield that is greater than the current inflation rate, which is 5.7%. But we're using the February information. We don't know the information of March. It's still going to come. So maybe the numbers will have changed, but you can always change the filter. And also we're looking at companies that are in an uptrend. We looked at different companies that we're interested in. We find trading opportunities based on the price action, but you already know that those companies, they pay dividend. We are confident. But remember that dividend come from profit. So between now and any time in future, if that company is no longer profitable, they might not afford to pay dividends. Then the dividend yield of that particular company, it then goes to zero, meaning that if we still use the filter of dividend yield that is greater than 2%, then we will not have those companies in our portfolio, because those companies will no longer be paying us dividends. We also mentioned that there are some companies that have higher dividend yield. We don't have them in this list because those companies, the share price or the price action is not attractive to us. It may be attractive to you, but to us it's not attractive. There are other great companies that have a dividend yield that is less than 2% that we also missed because of the criteria that we used to search for these companies. So we hope that you found this video useful, and then you can start applying this information, finding other dividend paying companies and building that dividend portfolio. If you enjoyed this video, we'd like to ask you that you consider subscribing if you haven't subscribed, and that you give this video a thumbs up and you share it with as many people as possible. Remember, the money in the stock market does not belong to me or you. It's just money that is there. So sharing the information, I'm not losing anything. I'm just giving anyone a chance to go and find companies that pay dividends, where they can make money, grow their wealth, and do whatever they want to do with the money. So that's it for today's video. I will see you in the next video.